In this module, we will discuss about custom valuation and dispute settlement. Custom valuation is the process where custom duties are levied by the custom authorities on the value of goods or services imported. The customs authorities adopted the system as a means of protecting tariff concessions, implementing agreed trade policies, collecting revenues, and protecting the health and safety of the people of the country. The Article 7th of the GATT outlines the provisions and procedures for the valuation of the goods and services and is applicable to all the members of the World Trade Organization. Custom valuation aims at determining the customs value of the imported goods or services in a fair, neutral and uniform way that conforms to the commercial realities by preventing the applicability of arbitrary or fictitious customs value for levying the duty rates. The agreement was initially negotiated a common customs valuation system known as GATT Valuation Code at Tokyo Round, where the large majority of the developing countries choose not to accept it due to the controversies between developed and developing countries for customs valuation. In the end, the developed and developing countries arrived on compromising their differences, adopted the agreement in the Uruguay round negotiations. The WTO Committee on Customs Valuation has been vested with the powers to administer the agreements. A technical committee on customs valuation was also established with the view of ensuring fair and uniform interpretation and applicability of the agreement at wider level. The starting point for customs valuation under the agreement is transaction value as defined in Article 1st describing the price actually paid or payable for the goods when sold for export to the country of importation. Article 1 read with Article 8 of the agreement allows the customs authority to adjust the price actually paid or payable in cases where certain specific elements form the part of value but not included in the price of the imported goods. Article 8 also allows determining the transaction value by including the value of certain considerations which may transfer from seller to buyer in the form of specialized goods or services rather than in the form of money. There are two types of methods on which the import duties are calculated. First, specific basis. Under the system, a fixed amount of duty rate is charged on the basis of quantity of goods imported, such as 0.1 cents per liter of imported oil. Second, ad valorem. Under the system, the duty rate is expressed as a percentage of the value of transaction of goods imported. Third, compound basis. The duty rate on certain imported goods may be the combination of specific and ad valorem rates. Nevertheless, ad valorem are most prevalent in international trade as they are used by the WTO members. Now, the question arises on what basis the customs official determine the value of goods and services is of great importance for the importer, similar to the rates of duty specified in the tariff schedule for the goods. Presently, the rules for determining the value of imports for levying customs duties are well organized and elaborated one and are outlined in the WTO Customs Valuation Agreement. After reading this module, you shall be able to understand the concept of customs valuation, know about the methods of customs valuation, analyze the preferential treatment to developing countries, understand the dispute settlement procedure of WTO. Now, let us understand about the methods of customs valuation. These methods of customs valuation are applicable for the cases where there is no transaction value or where the transaction value is not acceptable as the customs value. because the price has been distorted with the outcome of certain conditions. 6 methods have been specified to determine the customs value of goods or services as discussed below. Transaction value, the total price paid or to be paid by the buyer to seller or to benefit the seller for amount of imported goods and consist of all proceeds made as a condition of sale by the buyer to seller or to the third party on the direction of seller to meet the obligation. The customs value would be considered as transaction value if all the conditions mentioned below are satisfied. A. There must be an evidence of sale, that is, invoices, contracts, purchase orders, etc. B. There must be no constraint on the usage of goods imported by the buyer other than constraints which are imposed by the country of importer, where the goods are limited to geographical area and do not affect the value of the goods substantially. C. The contract or sale must not be subject to certain conditions or considerations for which the authorities cannot evaluate the true value of the transaction. The examples of this condition may be like any one or in combinations of them are as follows. Where seller puts the conditions on buyer to buy other goods in specified quantities from him where the price of the goods imported are based on the other goods that buyer charged from seller and where amount is charged on the basis of a form of proceeds inappropriate to the imported goods. D. There shall not be adjustment or accrual directly or indirectly to the seller with respect to any subsequent resale, use or disposal of the goods by the buyer. E. There must be an existence of sufficient information for adjustment to be made to determine the transaction value such as commissions and brokerage except buyer commission, packing and container cost and charges, assessed royalties and license fees, subsequent proceeds, cost of transportation, insurance and other related charges based on CIF basis and do not include after import expenses incurred on the goods. F. That the buyer and sellers must not be related with each other. They are found to be related with each other in the following circumstances, such as they are the office bearers or directors of each other institution. They are partners, employer-employee, hold 5% of voting rights or shares directly or indirectly. Both of them are controlled by third party or they are the members of the family. Transaction value of identical goods. The value of transaction is measured cannot be determined on the basis of Article 1. Then the next method is to evaluate the goods on the basis of identical merchandise if the goods are same in all respect except minor differences such as physical characteristics, quality, reputation of the goods under consideration or produced in the same country, manufactured by the manufacturer of the goods being valued, if available, sold for export to the same country of importation and exported at or about the same time for evaluating the value of goods. While following this article, the transaction value of identical goods of the same commercial level with same quantity shall be value of transaction value of goods concerned. Where there is non-availability of sale of such identical goods, the value at different commercial level with different quantities can be considered for such valuation provided the differential attributable to commercial level and or the quantity shall be used. Such adjustments can be provided on the basis of evidences clearly depicting the reasonableness and accuracy of the adjustment. For the applicability of this method, two or more transactions of identical goods are required to be identified and the lowest such values shall be adopted for deciding the transaction value of goods imported. Transaction value of similar goods. If the transaction value cannot be determined on the basis of Article 1 and 2, the transaction value of imported goods is measured on similar goods if goods are component material and characteristics is resembling. Goods are capable of performing the similar functions and are commercially interchangeable with goods being valued. And goods are produced in the same country and by the producer of the goods being valued. For this, the goods must be sold for export to the similar country of importation and exported at or about the same time for determining the value of goods. While following the article, the transaction value of similar goods of the same commercial level with same quantity shall be value of transaction value of goods concerned. Where there is non-availability of sale of such similar goods, the value at different commercial level with different quantities can be concerned for such valuation provided the differential attributable to commercial level and or the quantity shall be used. Such adjustments can be provided on the basis of evidences clearly depicting the reasonableness and accuracy of the adjustment. For the applicability of this method, two or more transactions of similar goods are required to be identified and the lowest such values shall be adopted for deciding the transaction value of goods imported. Next, deductive value. The agreement provides that when customs value of imported goods cannot be determined at transaction value or identical goods or similar goods, it will be analyzed on the basis of unit price at which the import of identical or similar goods take place with unrelated buyer at greatest aggregate quantity in the country of importation. While implementing such measure, both the parties, that is the buyer and seller, must not be related to each other and the sale must take place at the time of importation of goods being valued. However, if no sale is found or at the time of importation it is agreed permitted to use sales up to 90 days after importation of the goods being valued. According to the article, the price can be determined at that point where greatest number of quantity is sold to unrelated person at the first commercial level at which such sales take place. The greatest aggregate quantity can be ascertained by taking the sum of all units sold at given price and then compared to the sum of all units of good sold at any other price. The greatest number of units sold at one price would be the greatest aggregate quantity. Certain deductions from the price at greatest aggregate quantity has been outlined in the agreement as the sale price taken to calculate the transaction value is the sale price in the country who have imported the goods from other country. These deductions are commissions, general expenses, sum of profits, transport cost, insurance, customs duties, other national taxes, value added by assembly or further processing when applicable are required to be deducted as these expenses are incurred within the country of importation. Next, computed value. As per the agreement where the